is going to delete you.
I'm so sorry.
Oh
this
gosh.
is the first time I've done this on Facebook. This is the
We're
first time I've
live.
done this on Facebook, so I'm sorry,
Oh,
lady.
really? Oh my
Yeah,
God,
I've never.
I'm so sorry. That's so funny. So hi everybody. We are live. We're a little late because we had technical difficulties, which happens, and it's just like being an investor. That's what happens. Hopefully, people will find, right. It's like being an investor. Amy's in the car. She's doing her thing. She's like busy. There's no time off for us. And so I wanted to come live because I want to provide value in these Facebook groups where women I know are working on their journey and are looking to learn and grow. Amy now looks like she's frozen, but she's still there. She's frozen with a smile. And
there I am.
And so, oh, there you are. Okay. It's showing you frozen, but I'm sure you're good. I can hear you. And and so the idea of this is that we are taking the time out of our busy schedules to invite you to the opportunity to learn more about real estate investing and about the ins and outs of what it takes to be a successful investor and really make the kind of money that most of the women want to be making that are joining this group or that are watching any of the feeds that I have going. I didn't do it on Instagram, but I have it on 3 Facebook live feeds. So welcome. We apologize that we're late. And for some reason, Amy looks like she's frozen, but you can hear me, right, Amy?
Yeah, I can hear you fine.
Okay,
yeah.
Perfect. Then it's fine. It's perfect. So we're going to get started because we value our time, we value your time, and we want to just throw out some nuggets on multifamily investing and hope that anyone that isn't here live with us will watch the replay so that they can get this value. And it will be in the feedback that I get that will determine how frequently I do these, because I definitely, like I said, Amy and I are pretty busy. So for us to pop in here, we really want people to get value out of it. Otherwise, it's not worth it for us. So with that said, Amy Tiemann, that I want to introduce to you, is an incredible multifamily investor. She just closed on 144 units in Houston. Oh, hi, you're back. And has done numerous multifamily deals in Austin. She's served as a general contractor, property manager. She does it all, which is something I really admire about Amy. She's not afraid to get her hands dirty and to dive in. Yep. And so thank you we already had, Amy was here live with us in Austin, and it was a great meeting. And she shared some wisdom. People really enjoyed it so much that I said, hey, can you come on Facebook and let's do a live feed and see, and share some of this wisdom. So hi, Amy. Do you want to give a little bit about your background, and then we'll just, share a couple of maybe tools that people can, if they want to get started in multifamily, what you'd recommend so that they can move forward with the knowledge.
Sure. So I'll say that I've been in commercial real estate for about 18 years. So as you said, I started as a general contractor. Then I transitioned into a real estate investor while I was a general contractor. So in all of my first multifamily investments, and this is what I tell everybody, you want to come in as a limited partner. You want to come in and learn from people, sponsors that have been around a while, kind of know what they're doing, because they should, as a good sponsor, be providing you, progress updates and telling you what's going on in the deal and giving you financials and all of those good things. And a lot of people don't realize, this is tip 1 for today, is that those financials are gold mine of information, man. Like understanding what, the expenses should be on a property is so helpful for you if you ever want to go buy multifamily real estate, because you're going to have to underwrite the deal. And if you don't know what you should be spending on advertising, on all the expenses, repairs, and maintenance, what you should be performing on your deals, then you'll get yourself in a world of hurt. So by becoming a limited partner in some of those deals, you get all of that information. You get to, especially if you're in like 4 or 5 deals, then you get to kind of compare how this sponsor runs it versus this sponsor runs it, right? Because not every sponsor runs it in the same way, and not every sponsor, they have to adapt to the situations that they're in. So that's always really, really helpful. The other things too, so as I got out of, now I'll get back over to my bio because I hop around.
Before, hold the thought for 1 second. I just want to make sure that everybody understands, if they're new, really new,
yeah, sure.
that the sponsor is the person that finds this deal and is putting it together. So let's say you find a multifamily deal and there's 144 units. You probably don't have $15 million sitting around to pay for it. So what happens is that one person puts together the deal. The JPs, what Amy's talking about, is a junior partner, which they often will have. They're often helping inside the deal, or you can just be an investor. I'm generally an investor, not a junior not a JP, but that's another way to get into it if you want to do. You have to be able to offer some service, either be able to bring in money or be able to have some skill set. Maybe you're a contractor, you can oversee the project, or you have relationships with banks, things like that. Okay, go ahead.
Yes. So I started as a limited partner investor, and but I was also the general contractor on every multifamily investment that we did. So we were originally a commercial contractor where we were doing retail stores, and we were building those all across the United States. We were in 16 states at one point. And I had my 3rd child, and I just couldn't travel anymore. And I really got tired of traveling because we were like traveling all over the place and managing projects. So what we did was we decided in 2015 just to become full-time multifamily investors, and that's what I've been doing for a while. So the sponsor, as you said, is that's kind of my role. So I use, because I've been in the business for so long and I know a ton of broker relationships and I know a lot of owners, I use those relationships to go find deals. I vet the deal. I go through and make sure that this deal meets my underwriting criteria, that it makes sense for an investor to jump in, and there's enough upside to where an investor has, that they're going to get a good return out of it, because that's the whole point of it. When you first get into multifamily investing, you realize more than ever how much of a team sport it is. And I know everybody says that, but it really, really is. Like you might limit yourself because you think you have to go buy a 20 unit because you have only X amount of dollars. But if you learn to partner with other people, you can get into larger and larger deals by just playing a role and filling that role, right? Even if it's just a limited partner. And that's how I tell everybody, when you first start, go in as a limited partner where you're just an investor, and so you can get the experience. But then eventually, if you want to, be crazy enough to do what I do, then you would want to start by partnering with other people, because it's a full-time business what I do, and so it's not for the faint of heart, and you have to be pretty tough to do it. But you don't have to do what I do to invest in multifamily, right? If you want to get in and get great returns and get all the tax advantages that you can out of investing in real estate, totally can do it. You just got to find good people like me that know what they're doing, that can run a deal. And so yeah, that's kind of some of the tips I have. You get there's tips on being on my role and what you need to do, and there's just tips on being an investor. So I'll try and touch on the investor side. And most of the time what it is like, how do you vet a sponsor? What are you looking at to know that the sponsor is a good sponsor and that they can take my money, right? A lot of the time is that you look for experience. Look for how many deals have they done. Have any of their deals gone full cycle? Like I've had 6 that have gone full cycle, that we bought them, we rehabbed them, we ran them for 5 years, and then we sold them. Like, not a lot of sponsors have that depth of understanding that they actually executed a business plan and made it all the way through their exit strategy, right? I mean, that's the biggest part of your returns at the end of the day, is how did you exit? Because that's a big portion of what your overall return looks like to you. And so, so that's a key thing. And they don't have to be, I'm an anomaly. There's not a lot of people that were GCs, that were property managers, that now somehow become a sponsor. There's not a lot of those. There's some, but there's not a lot. Typical sponsors are people, they're, good business people that choose to get into multifamily investing, or I've seen a lot of engineers and like engineers who get into it, that kind of stuff. And it's not like they can't learn. They most definitely can. But you don't have to say, oh, I want to get in a deal with somebody just like Amy, because there's not a lot of me. Just saying. There's just not.
You can get into a deal with Amy. And that's one of the things too, that I like a lot of the passive investing. For me, I do a combination. I don't really have that much interest in doing, in being, I would be a limited partner, maybe raising money. But I don't have, but even that's a job. And then, your day is about like doing webinars and making sure people know about it and calling, your investor friends and things like that. So that's also your time. But if you can make, because the returns on these deals are, the deal that Amy's doing right now, this Houston deal, we're projected to have a 9%, what is it, monthly or quarterly that you're looking at, Amy? I can't remember.
A quarterly distribution. It's a really big value add. So there's a lot of stabilization that has to happen. So I do, I project by the end of the second quarter, we'll start doing distributions, and then we'll start doing them quarterly. That's what we'll do.
Yeah, which is very aggressive and very, 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 very generous. A 9% out the gate is huge. Because oftentimes with these deals, they'll average, what they'll do is they'll tell you have a 7 to 9% return, but you maybe will only be getting 4% to start, or 2%. It depends on how they stabilize and how quickly they can get the money up to where they want it to be. But then the cool part is, like Amy said, is that it's about this exit strategy. And so that return is not my full return. That return is just what I'm getting paid while the property is growing and while Amy's making changes and improvements to the property. The big return comes on the exit. Where she's done all the rehab, she's changed the property, she's done everything that she envisions that can happen, and then her cap rate is going to be more attractive, and she's going to, because it's going to be making a lot more income. So, and then on the exit, it's anywhere from 15% up, generally, like averaging annualized. But with this deal, I know you have a very, very high number, which I will be thrilled if you get it. Because I think you're at, what is the number again?
Oh, the IRR is like 33. Well, it was 33% before we got our new loan, and then it's higher than that, but I'm just going to say 30.
So annualized, you're projecting what?
So that's IRR is all the money. Yeah, that's like 33% a year. That's all the money that I give back to you. So it's return of your capital. It's return on your capital. It's any distribution that I give to you. That's what you calculated your IRR over a 5-year hold. So if you really to think about it this way, I'm projecting 33% a year over 5 years. So that's basically 150% on your money is what I'm projecting that we're going to give you.
Yeah. That's very, very bullish. You usually don't see that. And that's just because Amy loves this deal that she got. So, but even if they're half that, that's still a heck of a return. I've bought a lot of single family homes, duplexes, and my properties have done very well. And I've probably averaged between 10 and 15%, which is very good, a very good return.
Yes.
You can't really rely on that in the stock market, but if you can do it, I did a lot of work on those. I managed the properties, I found the properties, I did the deals. I did everything. Whereas like I can just give Amy money and then Amy can just give me the money back and I don't do anything. That's pretty cool. So there's a lot of ways that you can do it. Now, that said, if you want to make more money or you're really ambitious or you're, you really want to dive in, then multifamily could be a great place to go. You just really, like Amy started saying, it's a full-time job. Like just don't think you're going to do it, on a part-time, or, maybe if you're going to do like 8 units or something somewhere, that might be easier. But 144 units, that's a project.
Yes, it is. And the big thing that I will tell anybody, get into real estate however you get into real estate. If you want to buy houses because you're going to make more money on real estate, on single family homes, than you would sticking in the stock market, right? So I'm a fan of real estate investing in general. But what I will say is that when you start buying commercial real estate, and multifamily is considered commercial, it's valued different, it appreciates different, it does all these different things that allows you to scale a lot more. So if I had $100,000 and I could go buy 2 houses or 3 houses with that, because I would leverage and I'd get loans on them, right? Or I had $100,000 and I could stick it into a multifamily investment, I would stick into a multifamily investment. And here's why. Because on your sponsor should be worth their salt. And what they're going to go do is they're going to do a cost segregation study, which is going to depreciate that investment. So basically, you're going to be able to write off at least 50 to 75% of your investment. You can't do that in single family, right? So I'm going to give you a tax break, a big, huge tax break that you can offset any other income with, because it's a multifamily commercial asset, right? So so there's the tax advantages for being on the commercial side are greater than they are on single family side. The whole thing about the real estate professional, that happens if it's single family or multifamily. So that tax break is awesome. That's great.
As long as you're active. And just so you know, I do cost segs on single families too.
You do?
I mean, you do. And you can do that for sure. I mean, it costs money, but there's ways to do it where you don't do a full cost seg, because a full cost seg could cost, I'm sure you're paying like $15,000 for it. Whereas like the one that I do is more kind of like more of a generic one.
Oh, I've never seen it where the math penciled out. Yeah.
Yeah, okay. You can still get it done though. You can still do cost segs on those smaller buildings.
Huh. I've never seen it penciled out to where it saved you any money and you spent all this money getting it done. I don't know.
You don't have to spend that much though. I mean, I think I spent like $700 on kind of on like a company that does it. Like it's called like DIY cost seg or something. And from there, they can do it. Although my CPA was a little balking at it, but he still used it.
Oh, really? Okay. All right. Well, that's good to know. Yeah. I haven't been in the single family space for a little while, so yeah.
Yeah, I have a friend who does it a lot, and it works out. Yeah, but it's definitely not the scale of a multifamily for sure, and not with the benefits. And definitely, I mean, that's why a lot of people that start out with single families, they move into multifamily because they want that bigger scale. So, for sure, that's great. Now, is there what else, what else do we want to leave people with before that they might want to think about? Like if they're starting out, what would they, like if I thought, oh, I want a multifamily building, what would be my first step?
I would say is get involved with some sort of mastermind group or real estate networking group where there's a lot other real estate investors there, because that's the best education you're going to find, right? Is being in a group that's constantly talking, and they'll have speakers and they'll do whatever, and that'll be nice and that'll be great. But just learning from the other people in the room of the stuff that they're doing and what they're trying to do, and they're all trying to put deals together, right? So
sometimes you can put one together.
Yeah, exactly. And it could be a smaller, well, maybe it's a 40 unit and you joint venture it. You don't have to do a syndication like I do. You maybe joint venture together and go buy a 20 unit or buy a 40 unit or whatever. So you're not having to do it by yourself. You're getting ownership experience. And then, it's you learn as you go, right? I did my I did on one of my deals bought a 40 unit just outright. One of ours that we had, and my husband and I had together. So we
You guys
took
pay cash?
yeah, no, we took 4 single family homes that we had, and we 1031 exchanged that money into the down payment on a 40 unit that the owner seller financed to us because we couldn't get a loan on it because it was in such disrepair. So, and that we made a great. Then we only held it for 2 years, but made we more than doubled our money on it, just from So basically we flipped it, but it was a good project for us because we were still general contractors at the time. It was kind of one of those deals. It gave us a lot of property management experience, on the multifamily side. This is kind of what we started in 2015 when we said, sayonara, we're not going to do construction for anybody else. We'll do it for ourselves. And so that's kind of the thing. So yeah.
Yeah, no, that's awesome. I love it. It's just I mean, it all boils down to like what I always hear with you is just this focus and like, okay, this is what we're gonna do, and then you just go do it. You're just very bold. And like I love like taking 4 units that are, stabilized, doing well, and just saying, no, we're gonna go bigger. We'll just sell these and we'll put them into something else. So
Yeah.
I love that. I love
Yeah.
that.
Yeah. It's kind of an interesting thing. Even so, if I had stayed in those 4 houses, I mean, when we sold them, we sold them outright. So we made, I don't know, we made a killing on them because we bought them during the Great Recession, right? So we bought one house for 46,000, and it was just in Round Rock. One house for like 53,000. The other one was like 54. Like no joke. This was back in
That's great. You're probably worth
2009.
right now.
I know, it's nowhere. Everybody's jealous, right? I was like, I wish I could buy a house for that, right? But you can't. So so in the 2017, when we sold the multifamily, the houses still hadn't appreciated, right? So if we had stayed in those houses, we probably would have made a little bit more money, but not like what we did by taking it out of there and buying that multifamily asset, right? So we took that $223,000, and then when we were done, we got paid back like $700,000.
Right.
Like with
It's
all the
that
cash
opportunity
flow.
cost too.
Yeah.
Like if you stay and you hold it. Although I always say, like, if you're, you're a very aggressive investor. That's the best kind. Like you make decisions quickly. You're willing to be like, yeah, let's sell this. Let's go here. A lot of people are like, no, I have something that's working. And I always say, like, if you have something that's working, like if she would have kept the houses in Round Rock, it wouldn't have been the end of the world. She would have made, like she would have made really good money, but it maybe wasn't as much, but it's still very good. So the point is that, like, you don't have to be, if you go with your risk tolerance, like if you're not that comfortable, can you imagine, like, if you still had those properties, it would still be good. They would still be worth $2 million.
Yeah, I'm kicking myself. I sold all my single family, especially the way they appreciated in the last 3 years. Holy buckets. I wish I had more single family in Austin.
We always read a crystal ball. Listen, I mean, I hear you. I mean, definitely, of course, moving from California to Austin, I definitely feel like I'm getting even though the prices are so high, I still feel like it's a discount. I mean, I've never been able to buy a house for $250,000. I'm like, what? But it's not happening in Austin proper, so nobody get too excited.
I actually did see a flip in Austin that hit the market at 224, and I'm so excited. Like, the prices are coming down. Yay.
Oh no. Yeah, no.
But it went really quickly. It went really quickly. So I'm hoping the prices.
Sure.
Yeah. But that's the other thing too is, and one of the things that helped you get into multifamily from single family. And I would tell people, I sold all of mine, but that was a stupid mistake on my part. I should not have. I should have kept doing single family and multifamily at the same time, because what helps you in multifamily is there's 2 games when you go get a loan. It's net worth and it's liquidity. And the easiest way for you to build your net worth is to own single family homes where you're buying equity. So when you go buy a $150,000 house, or $200,000 house, and you're buying it for $150,000, right? You just built your net worth up by, $50K, right? So if you do that repeatedly, right? So then now your net worth, maybe you can get to like $1 million in net worth. You can go buy a 20 unit. You can go buy 30 because anybody will give you a loan because your net worth is there. That's one of the
Exactly.
pieces,
Mhm.
one of the pieces to the loans. And even if you're not the sponsor finding the deal or you're doing all the hard work, if you are able to sign on a loan, that is so key. A lot of people will pull you into the GP just because you have net worth and you can sign on a loan because they need that, right? If they've
Mhm.
got all the resources deployed and they haven't built up a net worth, but they're a good sponsor, or they're like me, I had to get divorced in 2017, I had to give half my assets to Knucklehead, right? So, and I'm having to start over. Like so I need people with net worth to help sign on loans for me, right? So that's why I have the partners that I do. But
Right.
yeah, so so if you're going to start real estate investing, realize that you have more value, especially if you start buying, like say you had 10 houses or something, you probably could go sign on a loan for somebody or co-partner with somebody who needs just maybe an extra million or whatever it might
Right.
be to sign on a loan. And that'll um, further your, a journey in real estate investing. And you can start getting into a bunch of different general partnerships. And that's a good side to be on, right? I mean, you're able to, learn more from that sponsor. You're going to get the inside conversations and like, well, this is what's going on here. I'm pretty transparent though. Most of the LPs know everything that's going on in the GP conversations. There's nothing that I don't hide. We had a property manager leave us at the altar. I'm like, heck, and just a bunch of different things that happen. I mean, it's a rough road. You just learn to pick yourself up and keep going. But you get to learn all the ins and outs and the ugly and the pretty of real estate investing when you get on that side of it. So I mean,
Yeah.
it's good. I
Awesome.
mean, yeah. Yeah, and if I
I
could
love
find
that.
houses to buy, I would start buying houses again. I mean, it's not a bad gig to be in. Like if you had to park your money somewhere, don't stick it in a bank, stick it in a house. Like stick it in a rental house that's producing income. You're gonna park money somewhere. That's where I
Yeah,
would park it.
I think too. Yeah, I think it's a good place. Good place to be for sure.
Yeah.
Now do you have another deal right now that's in the works, or did that one fund?
No, it hasn't funded. I was negotiating with the owner. We just signed the contract yesterday. So I do have another one. You need to be in a pre-existing relationship with me, so I can't talk anything about the offering.
Okay.
But
So if someone
but
wants to know Amy and has money
yes.
to invest, it's probably you do need to be accredited. Is it a 506?
No, this one is not. So this one is a 506B, which means why I can't talk about it on social
Right.
media. But I have lots of deals, and y'all should register to invest with me. Is what I always say.
So I'm going to put in Amy's information. And then also I'll just end by also saying that the Real Deal Formula Mastermind that I offer the 6 month coaching with my course is going to be going up at the end of the month. So
Oh,
you should sign up for
yay!
that if you need to.
Yay!
If you want to learn how and have support, then that's the way to do that. So, and we have these Facebook groups, so you can certainly engage here and anywhere. And, whatever it is, whatever takes you forward, don't be afraid to let go of the money. Cause I do find that sometimes we hang on, like, or like, is that going to give me the return? And at a certain point, you got to kind of measure and go for it. You win some, you lose some, but you'll win more when you go for it more. So it's pretty important.
It is. It is. You can't be an investor and be scared. I mean, at the end of the day, and you might get. I'm not gonna like lie. You might get into investment that doesn't perform as well as you think it will. But overall, you're going to be better off if you're investing your money than not investing your money. So,
Exactly. In real
just
estate.
saying. Yes, most definitely in real estate. I don't trust the stock. I got out of the stock market in 2007 and never went back. So
Oh wow.
I'm
Okay. Well, I'm still in it. I'm also a little bit of I'm in Bitcoin, but not that much. I mean, I'm not. I would say, I have a portion in there, but slowly it's moving out. It did so well. It was kind of hard to, not stay in at a certain point. But
yeah.
okay. So thank you everyone for we had some people come on and some people listening and off and on, and I really hope that a lot of people get to watch the playback. And thank you for your time. and I'll look forward to
Thank
connecting
you.
soon. And I'm going to put the notes in so that they can go to your website and find out more about you. And
Oh, awesome. That's very cool. And this is a really cool format. I was like, I'm like user challenged here.
yeah,
But
like
it's
what's
awesome. It's really
well,
cool.
it's a lot harder if you try to go on Facebook and you have to click it, and it's just so weird. And so this StreamYard is really wonderful because it's just like you just pop it, you're in, we're on, we're live. We can't see the comments as easily, so
That's awesome.
we'll see those later. But it doesn't, I mean, sometimes I can see them. We didn't have that many people on today, so I haven't done this in a while. So, but it was great. Thank you. I always love seeing you, and it's always a joy. So have a beautiful day.
Yes.
I'll talk to you soon.
All right, you too.
Bye, everybody. Bye.
Bye.
Thank you for watching. I hope you enjoyed this video. Like and subscribe below, and you can find out more at wealthwarriorwoman.com.